Peter, Chief Market Economist, Spartan Capital Securities is now with us. Peter, what do you make of the 1,000-point move on Dow overnight?
A couple of factors here. One, we're at the end of the quarter, and so we have institutional window dressing. And then, of course, the fact that we had a very sharp rise in oil prices of over 8%. So that basically caused a short rally covering, and the market obviously was in a very oversold condition. And these two factors, I think, is what really propelled the market higher today. I don't think that it's the beginning of a new rally. I think it's as I said before, short covering, window dressing, that could carry maybe for another day or two, and then probably resume another downward trend, perhaps retest the lows that we saw on Monday, and then just begin to maybe consolidate.
Right. What do you make when you get such a relief rally? Mostly such relief rallies are short-lived, whether they are on upside or downside?
Well, really nothing has changed from Monday to today. As I said, the market was very much oversold, and there were a lot of good buys out there, and so this finally attracted the shorts to cover and new position buying by institutions. But what we really need to see is a change in market sentiment, and that sentiment would have to include renewed confidence. And the only way I believe we're going to see that is if we have a closure to the government shutdown, and of course, more importantly, and probably the key to a final market bottom would be a resolution of the trade war.
What is the sense that you get when you look at emerging markets versus developed markets? What do you think looks better for 2019?
Well, I think emerging markets can rally, provided we don't continue the trade, provided that the trade war doesn't continue to levels that would cause a global recession. I don't think, that a recession on a global scale can take place in 2019, but certainly can happen in 2020. And again, the key is to get the trade war settled. And if that happens, then I think, the economy here in the States can grow between maybe 2.25% and 2.75%, and that would be certainly a cushion for the emerging markets.
Right. And with the sort of commodity moves that you're seeing, do you think that's a space which was still holding out, and now most of the major commodity worldwide have seen a slippage? Well,
if you're referring to oil, I think that we've seen the bottom in oil. Again, a lot depends on the economy, but there's no question that if OPEC has to take further action, either by extending the production cuts or perhaps even adding more cuts, then I think we've seen the bottom. So it's all predicated on the stabilization of the world economy at this time. As far as gold is concerned, I think that we can continue to rally because, as I said, there are a lot of uncertainties that are still going to linger, and I think that gold is certainly beginning to gain more respect among investors, and that means that we could see gold prices continue to rally. I wouldn't be a bit surprised to see it move above the $1,300 level in the short period.
Right, but gold should be a space which investors should look to allocate some money.
Well, I think every portfolio should at all times have a certain hedge in gold. Of course, in turbulent times, that percentage should move up. But I would kind of say that with the prospects of the market still staying in a volatile trading range, I think that gold warrants anywhere from 10 to 15% of your portfolio as a hedge against further turbulence.
Right, Peter. Thanks so much for taking out time for us. Always good to get perspective.